As temperatures fall across the United States, the S&P 500 continues to climb higher and higher. We'll take a look at that and 5 stocks in today's market update. Let's start with the S&P 500. With yesterday's close, we've gained back almost everything we gave up after the little Greenland sell-off. And if you watched our market forecast back then, we anticipated this was going to be a short-term pullback. And at the time, we said it looked like the S&P was going on sale, not going out of business. Now we're back to a critical pivot point. And if the S&P is going to make a higher high, we need to turn our attention towards MACD. One of the problems we've had with MACD is that while the S&P is continuing to carve out new highs, the MACD indicator has been carving out lower highs. In technical analysis, this is called divergence, and it needs to resolve itself. Either the MACD indicator needs to go up and start making new highs, or the S&P eventually is going to come down and send us into a little longer-term downtrend. I'm hopeful that the MACD will turn up. Keep an eye on this, though, and if MACD starts to make a new high and the S&P 500 can break through this resistance, I expect that we've got a little bit more bullishness in store for us on the S&P. Now, let's take a look at Apple. Over the weekend, I recorded a video for our power trader students taking a look at any time Apple has lost 8 weeks in a row, the 9th week overwhelmingly has been bullish, and we set up a trade idea on this. You know, I'll do that. We'll be a little more conservative, and that still gives us a 1.2 R. The stats are so solid. I think it looks like Apple should spin around and head back on up. So I'll give myself a little more room. Effectively what will happen is it'll be a smaller position size, but that's okay. Now, if you're in that power trader session with Monday's gains and how today is opening up and earnings coming up on Thursday, I would move up my stops and exit that trade before we get into earnings. Now let's look at GE. GE's been in a beautiful uptrend for quite some time now, but had a pretty significant pullback, and it did so on positive earnings. We beat both earnings and revenue. This is another example of how a great earnings report does not necessarily mean a stock is going to go up. Instead, what it did was go on sale. Our stochastic oscillator is down below 20. We're coming up near a logical point of support. We may trickle on down here a little bit further, but GE is another trade that I'd be looking at buying into a bullish trade with targets on up here around 320 or so. Next, let's go look at Wells Fargo. We looked at this a few market forecasts ago, and Wells Fargo continues to be a trade that I've got my eye on and would be getting very close to considering entering a trade. If we zoom out a little bit here, we can see that Wells Fargo has been in this beautiful uptrend and pulled right back to support. Let's put another indicator on there called simple moving averages, and you can see Wells Fargo has pulled right back to our 100-period simple moving average. And just looking back over time, when Wells Fargo has recently interacted with these moving averages, it tends to act as a support, a floor, pushing price back up. And I would say that with our regular support, the blue line, and then also the moving average support, the darker blue line, there's a good chance that Wells Fargo is going to continue higher. If you were looking at a trade idea on this, I'd put my stop down here below support with a target on up around 95, maybe even $97 or beyond. We could do some additional forecasting using Fibonacci analysis if you're familiar with that kind of analysis. Now, since it's been freezing cold here, I thought, what goes well with cold? How about some Coca-Cola? Just imagine it's a hot summer day and you're going to enjoy a bottle of Coke. And unlike the other stocks, Coke is actually at a resistance right now. Maybe more accurately said, it's at a pivot point. It could break out, but it seems to be trading back and forth between resistance and this rising support level. So this is a critical decision time for Coca-Cola. Are we going to break out and continue higher, or are we going to come on back down to our support? And the truth is, I don't know, and nobody knows, but it's a very important time to be watching Coke because this is a pivot point. And here's how I would trade it personally. If Coke starts to head on back down, then you've got an opportunity to short this and continue on down to this rising support. Now, if Coke were to break out, I would hold off trading it for just a second because there's a good chance that it will come back down, test this old resistance as new support, and then continue on. So the latter will take a few more weeks to develop, but if we do start seeing Coke sell off, there's a pretty good chance it's going to come down around $68, $69 or so. Lastly, I want to leave you with this. The Federal Reserve is going to be giving an announcement on Wednesday. Today is pretty quiet. There's no news forecasted today, but tomorrow the Federal Reserve is going to be giving an announcement on the upcoming interest rate. There's no change that is forecasted. So if there is a change, if interest rate drops, or even less likely if it were to go up, you're going to see the market react pretty significantly. Right now, I don't anticipate there's going to be any change to interest rates. And that's today's market forecast. Hit subscribe, hit the like button, put a comment in the comment section. It really does help us get this information out there. And we'll see you soon for your next market forecast. Take care.